Hello everybody, welcome back. I'm going to sit back for this video because according to someone on my live stream last night, I have a habit of just filming my forehead, so I'm just going to sit back and chill. I prefer to do it like this anyway, so long as the sound quality is okay. So first we're going to think about the BTC because last night we had Mr. Powell talking from the Fed's perspective about inflation and how it's a problem and it needs to be dealt with, and it's going to try and balance the market with inflation, but inflation is a priority. Basically, that's been the deal since before these announcements, really. The dollar basically responding to this for the last few months, really, well, since the lows, but basically we're going to have rate hikes. That's fine, that's normal, that's expected, and inflation needs to be sorted out, and that is the priority, and fair play, that should be the priority. So the dollar, you can see yesterday the dollar wins and continues to win today. Absolute tear up right now, and we've been expecting this because remember what we were saying about the dollar. The fundamentals haven't changed, even though we got that CPI report. 7% inflation. There's no difference to the fundamentals of what's causing the uptrend in the first place. So it came down, and now it's gone back up, and it would appear to be today dancing with the prospect of making a new high for the local high. That would be, I think, to be honest with you, at this stage now we are looking for a little natural pullback just as part of this chart's concerned, a natural pullback, pretty much dancing around the 97 zone, a natural pullback around 97.1. 97.2, and that could then allow for everything else to start to balance out a little bit, because this is what we're looking to do. We're trying to find equilibrium between dealing with inflation and not completely annihilating stocks and crypto. Obviously, crypto is just it's like an amplifier of the Nasdaq at the moment, so they're highly correlated at the moment, and it's a pain in the ass, to be honest with you. It's a pain in the ass. One of the things that drew me to crypto years ago was that it was less coupled with anything. It was like the charts were relatively pure, and they're not really anymore, and it probably might not be again, to be honest with you. There's going to be high correlation until basically Bitcoin reaches its absolute peak, and then trends similar to something like gold. That's always been my take on the matter. When the circulating supply dwindles to the point of people aren't selling it, it will basically be whatever price it will be, whether that's $500,000, $1 million, $10 million per Bitcoin, who knows, somewhere down the line. It will then stay at that a reasonable area and trade similar to that of gold. But at the moment, this is still the time to pick it up for the long haul, and again, that is what it is all about, and that's what I was saying on the stream last night. So we pulled back, and from an obvious place we overshot the mark here on the 10 exponential, and lo and behold, rejection from it. That candle is not a very encouraging looking candle, to be honest with you. You've got to bear in mind what happened yesterday was a bit of a non-event, and he did his best to try and balance the markets with the dollar, but the dollar won and was always going to win, and so now we're going to continue with the downtrend, unfortunately. But how aggressive is the downtrend going to be? I mean, at the moment we're below all major moving averages on the daily. The weekly's pretty wrecked as well, I have to say. Weekly's looking pretty wrecked. Below the cloud as well, which again we've been talking about this, and we need to pull our socks up over the next few weeks because we can't handle a price of this level or lower. To be honest with you, in about 3 weeks we have to be above 31, really. To avoid getting a very significant short signal on a weekly, which is obviously a bear market signal, and that would be longer, more drawn out, most likely. Pain for the market, but for the moment, right, we're still in an area of reasonable significance, and if the lows don't get set just around this area, which I'll tell you why in a minute, then we'll just have to wait for that short signal, and then we can just enjoy the shorts, really, I suppose, which is something that I don't promote because derivatives aren't for everyone, but if there were to be any use of a downtrend, derivatives are the way forward. I've been talking on the stream last night that for those who want to try derivatives, what I would suggest is, you can set up a Bityard account, and there's a practice account on there, so you don't have to use real money. But I think sometimes using real money is better because you take it more seriously, and so my preference these days is Bybit. And I've got links obviously below. And with Bybit, if you want to try derivatives, just try it using a 1x. And I know that you're not going to make much money from that, but the idea is that you're not going to lose much either. Employ strict risk management. That's the number one. I would say risk management is your number one priority. Number two priority is trading technicals and trading the chart. So make sure that if you do decide to use it and you want to try it and you want to learn it, I mean the chart is quite neat for a downtrend at the moment, and you know as it stands right now, it's not the easiest thing in the world. Obviously, that's why I'm coming out of this with so many different warnings if you wanted to try it, and just general basic rules like risk management and 1x if you're learning. But I mean it's following a pattern still, which is still downtrending. 10 exponential appears to be the main area of significance for any kind of major rejection, and if we do push up beyond that, we've got a center of the Bollinger Band coming in at 40,000, and then we've got 41,000 horizontal. So there's lots of areas to potentially short from, and again, you know, we could be approaching a bottom as well where you could go long. Again, if you're new to it, then either do the practice account on Bityard, which is fine, but if you want to take it more seriously, use Bybit and just use a 1x leverage. And remember, your number one priority is going to be risk management, so stop losses. Put your stop losses in as you're making the trade or shortly after, and don't worry if it gets hit. Trust me, that's your number one priority. Right, so that out of the way, like I say, if you want to do that, you can, and you know, this is how we can cope with a downtrend, and it can be relatively profitable, to be honest with you, because it's such an aggressive downtrend with such obvious places to go short from. Then yeah, there can be some serious cash get made. So, what I was going to say about a potential bottom area, I was talking on the stream last night about the psychology of whales, right? So, back down here, right, back in January, February, this is exactly when this candle body here, this wick candle body, this is Elon Musk telling everybody that he'd gone hard and heavy into Bitcoin, and he caused this wick. Now, you know, bear in mind, you know, wicks like this is a FOMO wick. You know, this isn't Elon Musk buying. He'd already bought. He could have bought anywhere around here, anywhere. Presumably, you know, let's just imagine he bought the top of this rally, or you know, or just the bottom. It doesn't really matter. This is the zone that he'd bought in between 29,000 and maybe 40,000, so 41,000. That's Elon Musk's chunk. And then when he went public about it, this wick was caused by everybody else going crazy. Oh my God, he's bought. Let's go mad. It's never going to go down again. Elon Musk has bought, and that's where he bought it. So if we're thinking about the whales, what whales might want to do is wait for Elon Musk's potential entry point to buy there or lower, because then they will have bragging rights. I don't know why I'm doing it like this. Then they will have bragging rights over their entry point. Again, this is talking about OTC or maybe through exchange, but largely OTC buys and large chunks, so big portions of Bitcoin being sucked up by big players. So let's think about it. This is the anywhere below here is below Elon Musk's entry point. Yeah, assuming that he bought around here, and I think that's reasonable to assume that. So all of this is whale area. They will want to buy that zone, and it's a big zone. We could be talking 18,000, although that's highly unlikely that it will come down there. But we have to bear in mind that if we did come down here and we stayed down here for too long, we will get the short signal. So whether the whales buy it and ride it out, or the whales buy it and it gets pumped straight back up again, this is the zone, right? We're talking 18,000 minimum to basically 28,000. Top of the zone. I'm pretty confident that this is going to be an enormous turnaround. The other thing that we've got to look at is this descending trend line. So coming in at the top, found a big rejection here, all the way back down again, came back up again here, massive rejection, and then recently came up here with a massive rejection. So since we've been hitting that, I mean, that is clear that it's almost like an electric fence. The price action cannot handle it, and it just completely dumps every time we touch it. Really, really nasty. I mean, from the top to the bottom of these dumps, particularly, we'll just measure it to the what we're doing. Measuring it from the resistance down to the major area of support, 16%. Obviously, it went down a lot further afterwards. The next time we touched it, That was a 21%, and then recently we touched it just last week at some point here, and that was another 24%. So each time we touch here, it's horrendous. But like any downtrend, it's going to go to zero, and it's unlikely that we're going to get pushed to zero. So I'm thinking the most likely scenario for us to turn around and get actually bullish is whether we turn around, somewhere around this CME gap, where we come down to touch the 29,000 and break out, or we break out just below it. It's the breakout of this descending trend line is where we can all get excited again. It would mark a definite change in behavior. Obviously, we can think about the horizontals that we need to reclaim. First of all, 40 to 41. Then we're talking really, I suppose, between 46, 47, and really, we definitely need to get above this major breakdown here at about 53. These are all a long way off right now, but the change in behavior begins with a change of consolidation. So consolidation being over, largely speaking, and looking to creep out of there. So if we think about time zones for this to happen, so we just have a look at the chart like this, and if we think about this being the turnaround point, in the form of time, this descending trend does map time. If you think about it, it'll come all the way down to zero at some point this year. So that's not going to happen. We think about this area here being the whale zone, where the whales will want to be buying it at, which means that worst case scenario, we could be going all the way down to 18,000 between now and April before we could potentially have a breakout here. So the upside will likely begin, and the buybacks will certainly begin pretty soon, to be honest with you. People are thinking about this being a bear market like the one in 2018. That it doesn't match. It doesn't match. We've already spoken about how, and we refer to it all the time. This dump down here was generally caused by the new Megatron virus. And then we'll push down the stairs. Then that's not just that was traditional markets too, all suffered the same kind of vibe. We spoke about that, and we actually nailed it. We took a lot of profit. We de-risked our portfolios, whether that's for stocks and for crypto, in anticipation for that. So we nailed that. It wasn't based on the chart. That was based on outside external events. Then we've also got, as we saw yesterday, such a big deal now. We got the Fed tapering, rate hikes, all that kind of business, right? Again, that's got nothing to do with this chart. Bitcoin isn't downtrending of its own accord, not like it did over here. This is 2018. This is a bubble pop, ran all the way up, highly speculative, went absolutely bonkers and bananas and crazy, and then popped. And then went into a massive, massive bear market. We talk about this when we see these altcoins all the time, off the top of my head, things like Bepro and Dent, and we see these huge, massive parabolic runs, and then we just see huge, long-term continuation of consolidation, underperformance, basically wrecked. It needs to cool off for a long period of time, because charts get destroyed with FOMO. They get destroyed with FOMO, because that doesn't apply to technicals on the way up, and less on the way down. So that was a bubble pop. This is not a bubble pop. This is a peak, definitely a naturally formed peak, I would say. But then the majority of this downtrend has been emphasized by external events that control not just Bitcoin but the overall market. So it's relatively natural. It's a consolidation driven by economic factors, right? So it's not a bear market for Bitcoin. There might be a bear market come in, but as the Fed said yesterday, that's not their intentions. They will look to balance inflation with the markets. And so if a bear market looks like it's going to kick in for traditional markets, it will be resolved, to a soft extent. It won't be allowed to go into a long-term downtrend. That's not their intention. They will balance it, but for the moment the priority is the inflation, and second to that would be markets. Markets have done very well. Most people have done very well, and this is only the first quarter. First quarters can be like this in general, for traditional markets, obviously. So let's put things into perspective. We are not looking at a major bear market here. We're looking for a turnaround point, and use of psychology would suggest that this area here would be a whale accumulation zone like never seen before. Now, those institutions who have missed the boat will want to step in anywhere into this zone, because essentially at that point they can join the gang, and they can join the gang with bragging rights, having bought large amounts at lower value. So there you go. That is my take on it. Again, if we think about this descending trend as a timeline, it's going to end as early as March to as late as April. So it's not an enormous amount of time. Now, during that time, all kinds of stuff could happen. And what we'll be looking for on the chart especially is going to be some major divergence. We don't have that. We do have a nice low formed on the RSI, which doesn't mean much. Bullish divergence forms from a very low low being formed on an RSI. So it's a good starting point, all right? We do have a downtrend in play. We came up to test it yesterday, got rejected from it, and closed all the way down here. So at one point, we were touching the trend line here. And then we close all the way down here. This is a nice place for bullish divergence to form because that low is quite extreme, more extreme than the one in May. The only one prior to that, which was lower, was in March, March 2020, which was a big month. Let's face it. And then what we got from March 2020 is lower highs, lower highs, lower highs, lower highs, and that corresponded to a big move up. Same thing over here. We've got lower highs, lower highs, lower highs. Lower lows, lower lows, lower lows. Sorry, higher lows, higher lows, higher lows. I need another coffee. So that's what we'll be looking to see form, and we've got potentially the starting block, the first stage of that forming at the moment, which also means we would really be looking for lower lows to form on the daily, which means lower prices, which means the continuation of a downtrend, which is clearly what's going on at the moment. We're still continuing the downtrend. So if you're looking for opportunities in this market, whether that's for a position, a spot position, or to find a decent place to take a long from, then we're not there yet. We're not there yet. But until then, we can short the market in little tiny trades. We can hold off for incremental buybacks. Next major one would definitely be around this zone here, which is the summer lows. And also dipping our toes into this area where the whales, I expect, will be sucking it up like you've never seen before. It'll become part of everybody's balance sheet, I imagine, this time round, which means that the circulating supply is going to be less and less and less. And that is the sort of thing that keeps Bitcoin's price up. Not the fact that some big players have bought in, but the fact that the circulating supply is dwindling. There's more people buying than there is selling, and that's basically what's going to sort this out in the long term. So this downtrend will continue, but the lows I expect will be in this box, in this area here, and the turnaround I think will be relatively aggressive. I'm not saying V-shape, but I would expect it to turn around here and do well throughout the rest of the year once we've broken out of this trend line. So be prepared for the ultimate long and the ultimate buyback. Now, what this will do to alts is unclear at the moment. We've been looking at the Bitcoin dominance, and we're currently looking to break outside of this weekly center of this Bollinger Band here on the weekly. And that's normally a rejection zone. It's not getting rejected at the moment, which is why some of these altcoins largely are getting absolutely slapped in the face. But this is going to be the all part of it. And if Bitcoin dominance moves up aggressively, that's also good in the long run as well, because again, we're going to focus mostly on Bitcoin, and altcoins will come later. No altcoin has got a good setup. We determined generally last night that the majority of altcoins versus Bitcoin look like they have a bit more, maybe like a 20% retracement across the board. Generally speaking, that's with their Bitcoin pair. So if Bitcoin comes down 10-20%, then altcoins will continue to outperform that downtrend. They will get hit harder than Bitcoin. But major support's coming in for most altcoins with their Bitcoin pairs in about 20% from now. So whether you're in it to win it and take bite the bullet and sustain some kind of downtrend for and temporary loss of your Bitcoin value now, or you try and catch the ultimate low, it's up to you. I know what I'll be doing, and I'm just going to be looking after mostly my Bitcoin for the moment, and then transferring some of that into altcoins when the time is right. Like I say, let's see if we can get a bottom form, and it's Bitcoin that's going to determine the overall picture for crypto. So let's not go crazy on altcoins now when we can look at Bitcoin and get a much better understanding of how this is going to perform and behave, and if we're going into a bit more of a safety zone, or if a bottom's forming, or there's a change of behavior. Altcoins on the whole aren't going to be able to tell you that right now. They're just going to be saying probably across the board that they want to continue to go down more aggressively than Bitcoin. And again, Bitcoin still looks like it wants to go down. So we'll leave it with you there. So there's a lot of information I can imagine, but it's all relevant. And like I say, let's focus on the downtrend. Let's do some shorts if you feel comfortable doing that. And other than that, we will wait for this breakout of this descending channel, this descending trend line here, and then we can go to town. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.